Could the bankruptcy filing of China's Evergrande Group in the United States signal another 2008 financial crisis? Stick around as we explore the impact of China's Evergrande Group's bankruptcy on you, the global economy, and hidden aspects of China's financial landscape. Greetings everyone, I'm Chris. Today we're unraveling the mystery behind China's Evergrande Group filing for bankruptcy protection in the United States. We'll explore the company's meteoric rise, the bubble-like conditions in China's real estate market, and the ripple effects this could have on the global economy. By the end of this video, you'll better understand economic news and improve your financial literacy. We'll delve into Evergrande's rise, the current crisis, and its far-reaching global implications. If you find this video interesting, please support us by hitting the like button. Now, let's get started. Evergrande Group growth background. Founded in 1996, Evergrande Group is a leading real estate developer in China. Over the past few decades, the company has grown significantly, operating more than 1,300 real estate-related businesses in more than 280 cities in China, making it a major player in China's real estate industry. In addition to real estate, the company also diversifies its business into other areas, such as mineral water and food sales, tourism, internet-related services, insurance, and healthcare. The company is ranked 122nd in the Fortune Global 500, which ranks companies worldwide by revenue. The rapid growth of the Evergrande Group was fueled by an increase in real estate prices, creating a bubble-like economy. In this environment, the price of China's real estate rose indiscriminately. In particular, Chinese real estate companies often begin selling properties before even completing the foundational work on the site where the property is to be built. Buying real estate in these pre-sales makes it easier to achieve the desired floor plan and interior design than buying after the property is completed, and it is also claimed to be 10% to 20% cheaper. Therefore, people who are thinking about buying a house, whether for their own home or as an investment, first make a down payment on a property that looks good and then take out a loan to buy it first. It's standard practice to make loan payments while awaiting the completion of a condominium, which may take a few years. Real estate agents collect pre-sale proceeds before even starting construction. Then, when the next site was purchased with the funds obtained, the pre-sale was carried out again, with only drawings and model rooms, and the precarious balancing act of trading was conducted. As they made money from these real estate transactions and rode the wave of the bubble-like rise in real estate prices, they were able to borrow more money from the banks. The company then immediately invested the money in new businesses, one after another, and in any case, through highly leveraged management, the company grew in a short period of time. However, a turning point came in August 2020. The real estate industry is making so much money that ordinary people cannot afford to buy real estate, and the Xi Jinping administration has begun to impose restriction. As tighter regulations impacted bank borrowing, payments to home builders began to lag. Consequently, some buyers did not receive their homes, despite having already paid for them. As a result, some buyers opt out, leading to decreased housing demand and falling prices. In other words, property values fell, and so on, in a negative cycle. Since China reportedly has housing valued at over $3 billion, more than double its 1.4 billion population, breaking this negative cycle becomes increasingly challenging. In particular, highly leveraged operations such as the Evergrande Groups, which allow for rapid growth, are fraught with the downside of ever-increasing debt. The company was unable to repay the borrowed money. Implications of the United States bankruptcy code filing. Well, on August 17, Evergrande Group filed for bankruptcy protection in a United States court. You might think that a Chinese company would file for bankruptcy in the United States, but as mentioned earlier, Evergrande Group defaulted in 2021, and this was a major topic of discussion in the financial markets. Since that time, the company has been trying to reorganize its operations, but the real estate market has remained stagnant since then, and the company has been struggling to find financing. The Chapter 15 bankruptcy case that Evergrande Group filed this time is a procedure for foreign companies to protect their assets in the United States. If this procedure is applied, it will prevent foreclosure by foreign creditors. The Evergrande Group has clarified that this is a debt restructuring process, not an outright bankruptcy. So the bankruptcy filing has not caused an immediate financial shock. Nevertheless, this issue is both significant and deeply rooted. It is said that about a quarter of China's GDP is related to real estate, which has a major impact on the economy. To begin with, apart from the real estate problem, China's economy is in a serious slump due to the prolonged zero-corona policy. Deflation is progressing and youth unemployment is serious. As a countermeasure, the central bank is even cutting interest rates. In contrast to developed countries, the current situation is that major problems are weighing more heavily on the already stagnant economy. In other words, the important point is that there are big problems ahead. Now let's look at the reality a little more. China's economy getting serious. The likelihood of the Evergrande Group successfully restructuring as they claim is highly doubtful. In fact, Evergrande Group's debts reached a staggering $300 billion at the end of last year. Moreover, the economic situation has been worsening at an accelerating pace this year, and it's unclear how the restructuring will proceed. In addition to the Evergrande Group, many other real estate companies in China are facing financial crises. Recently, a default issue arose for Country Garden, a major real estate developer, expected to suffer a significant downturn with a net loss of up to $100 billion for the first half of this year. Additionally, the company failed to meet the interest payments due on the 7th of this month for two of its dollar-denominated bonds. If it is unable to pay these within the 30-day grace period, it will reportedly default. Even well-managed companies like Country Garden face significant financial challenges. This situation of a succession of defaults and bankruptcies of very large real estate developers, due to the sluggish real estate market and deteriorating profitability, can only be described as extremely dangerous. In addition to the recession and the bursting of the bubble, climate disasters such as major floods have also added to the deteriorating performance, and there are no bright signs in sight. The slump in China's real estate is now affecting other economic sectors as well. There are concerns about the health of local government financing vehicles. Local government financing vehicles are basically budgeted by local governments in China, using local tax revenues, grants from the central government, and limited loans from banks. However, local governments have been aggressively developing infrastructure and real estate in order to boost their GDP for economic growth. In order to secure financial resources, they have established investment companies under local governments as a loophole in the law. This is a local government financing vehicle. In other words, local governments are acting as shadow banks to raise funds. The central government appears to be avoiding default by making payments to key local governments. But it is not clear what the breakdown of these bonds is, and there is still a risk of a major explosion, depending on how the central government handles the situation. Shadow banking, the practice of lending and investing at high interest rates to those who cannot get loans from banks, is commonplace in China, and the trust industry has attracted particular attention. Even here, there are reports of default concerns. It is reported that one of the largest asset management companies in China, China Fusion International Trust, has defaulted on a high-yield trust product it created. China Global Trust is the 9th largest trust company in China, with assets under management reportedly amounting to approximately $200 billion. No one knows how much the shadow banking industry, including the trust industry, is worth, what its financial condition is like, and it is completely unclear whether the Chinese government or the central bank will be able to fix the situation. Beyond local government financing issues, shadow banking is also a growing concern. It's unclear how much monetary and fiscal support can be given amid these cascading bankruptcies and failures. In simpler terms, the core issue is that the real estate slump is now affecting the financial sector, which has a more direct impact on the economy. China has been in the midst of a grand growth myth for the last 30 years or so, postponing every problem anyway until today. Even the United States subprime mortgage crisis, which we had some idea of what was really going on, led to unexpected losses and debts that hit the global economy. In the form of the 2008 financial crisis, the secretive nature of local government financing and shadow banking has left even experts and authorities confused, leading to market uncertainty. The Evergrande Group's bankruptcy filing in the United States, which has been making headlines for 2 years now, may not have had such a big impact on the market. However, there are countless risks involved in terms of what will happen to China's economy and how it will respond. Of course, the Chinese government is aware of the crisis and will be paying close attention to how it responds. The Chinese government might expedite contingency plans or even collaborate with Russia to resolve the situation. If such scenarios unfold, what are your thoughts? Feel free to share in the comments below. Thank you for watching. Don't forget to like, comment, and subscribe for more insightful content. Take care and see you in the next video. Goodbye!